Hello, everyone. Hello, welcome to our webinar in partnership with BP. Um, as usual, it would be really helpful if you could all just let me know if you can hear me well, if the sound sounds all good, um, just to make sure that, okay, great. I'm getting some messages. Wonderful. It's probably best to give it just a few seconds, maybe 1 minute, just so more people can log in. We've actually had such a great engagement. So I want to give most of you the chance to join before we start. Okay, great. So, hi again. Hi, everyone. Welcome to our webinar in partnership with BP. This is Diana Droppel, and I'll be the host, the webinar host for this morning. So, um, today we're looking to explore a really interesting topic, and that is the oil price crash effects on the biogas and renewable natural gas demand. Um, why are we doing this? It's pretty simple. Whether whether you work for a developer, whether you work for a municipality or an off-taker, whether you own or you operate a fleet, or I don't know, whether you offer a service in these markets, in the biogas and RNG markets, finding new sources of demand is absolutely crucial to your commercial growth, to the firm's commercial growth, but also to the industry's wider kind of decarbonization mission. So in order to learn more about what is happening in the biogas and renewable natural gas markets as a result of the recent oil price crash, we are really honored to have Harrison Clay. He is the Vice President of Strategic Development and Global Environmental Products for BP. He's very kindly accepted to join us on this fireside chat on this webinar. So we're really happy to have him joining. As mentioned just 2 seconds ago, this webinar will be shaped as a fireside chat, so you can feel free to send in your questions at any time. And Harrison will shed light on the challenges associated with the transition to low carbon products, some of the potential solutions looking forward as well. Um, the recordings for this webinar will be emailed to you. I know not all of you are able to join live, so don't worry, you will receive a recording as long as you've signed up to attend. Um, and yeah, that's pretty much it for me. I hope you all enjoy it. I'm gonna now, Harrison, I'm gonna hand it over to you. So yeah, please take us away. Thank you very much in advance.
Thank you, and thanks for asking me to talk today. I'm looking forward to it. Going to spend a little bit of time sort of talking about the background of what I think has driven some of the oil price crash, and then transition into what I think the impact is likely to be or is right now and likely to be in the future on the biogas space. So I think it's important to understand the context. There's such an enormous amount of change happening in the energy business as a whole, even before the impact of the COVID pandemic. If you look back, a few months before this all started, BP, among other major energy companies, all were making really big announcements about goals to decarbonize. So here at BP, that means net zero emissions by 2050. And that's an unbelievable undertaking for a company of this size with this large of a carbon footprint that's basically in the business of producing and selling hydrocarbons, to continue to provide a growing amount of energy to meet growing demand while taking carbon emissions down to net zero, is a total transformation of the business, really. And that was how BP was viewing the next 10, 20, 30 years before all of this happened. And I think, the strategy was obviously that you have to continue to meet current global energy needs, which of course are being met. The vast majority of our global energy needs are being met with hydrocarbons today across the planet. To continue to meet those needs, And while reinvesting the profits that are made in that business in lower carbon strategies, as well as new technologies to reduce the carbon footprint of those hydrocarbons that are produced and combusted today. So that's the state that BP has been undergoing for the last few months, and it should be hopefully completed by September. Complete strategic overhaul to reposition the business for a world in which we're not producing and selling hydrocarbons by 2050 nearly the rate that we are today. And to the extent we are, we're completely offsetting the emissions associated with production of those, halving the emissions that we have in third-party marketed products and achieving net zero across our business. So then the pandemic hits, and of course oil prices collapse, and we saw partially that was the demand disruption created by the crisis, people not driving, people not flying, huge reduction in demand for oil and gas. And we also had a oil price war. As the price started to come down, the producers, OPEC, Russia, started really getting into a price war, and the price collapsed so far that a few months ago here in the States, we actually had negative oil prices. People were paying you if you could take the oil away because storage was at its max capacity and there was just quite simply nowhere to go with it. Now, things have recovered a little bit since then. The parts of the world where they've been able to control the pandemic and demand has grown as economies have opened up, although it is in fits and starts. But so we're now at a place where oil is around $40 a barrel. I think yesterday Brent crude was at 43. But for a company like BP, and I think this is true for almost all of the major oil and energy companies, the global energy companies, the collapse in the price of oil just really causes you to need to think about accelerating the transition of your business. I think if you're a major oil producer and you're trying to transform your business to dramatically cut your carbon emissions, and now suddenly you can't even really produce and sell your core product, oil, at a profit. I mean, that was the vision for what was going to happen in 10, 15, 20 years, that we'd hit peak oil demand, the decarbonization, electrification, and other environmental needs to cut carbon emissions would ultimately make it unprofitable to sell oil. But that was envisioned 10, 15, 20 years down the road. Now we're seeing that because of the pandemic, that's hitting right now. So it really, to a certain extent, causes a company like BP or any of the major energy companies to need to step on the gas pedal in terms of transforming the business and decarbonizing and finding energy products that can be sold at a profit that also can be part of a long-term plan, something that doesn't have the carbon footprint of current energy products and therefore can continue to meet global energy demand without associated carbon emissions. So that's the perspective of a major energy company looking at the oil price collapse, the transition to renewables, and the need to decarbonize. All of these things are interrelated. It's interesting though when you think about the impact of the COVID crisis on the global oil price and demand, even with the unbelievable, really unprecedented disruption in demand, global carbon emissions this year are projected to drop about 5.5%. And that is less than what is needed to meet the goals of the Paris Agreement, which is about an annual drop of around 7.5%. So it's interesting, this is a footnote, even with this demand disruption, even that is not getting us where we need to be in terms of our emissions reduction, just emphasizing again the need to decarbonize and find low carbon solutions that are scalable, that can meet society's needs for heat and light and transport fuels. And so the backdrop here is this should all really be positive for renewable fuels, for renewables generally, because it emphasizes the need to transition to these products sooner rather than later, and it creates a financial imperative to do it sooner rather than later for the companies that have been in this space. That said, that's the big picture, but where the rubber meets the road and it comes down to, okay, where is the capital to invest in these projects? How quickly can these projects get built? What is the market going to be like for the product, for the end product? All of these then become, however, questions that have to be addressed at the ground level. And the impact of the COVID crisis in those areas is a challenge. It creates challenges. If BP's strategy was to spin the wheel on the hydrocarbon business and redeploy the profits in renewables, well, if there's no profits coming off the hydrocarbon business, there's less cash available to invest in these transformative energy, low carbon technologies. And I assume that's true for any oil company, right? Is that it creates challenges in terms of capital resources to invest in the next generation of energy products. And I think that's that the oil price recovery, obviously, some recovery up to $40, and next year maybe it's demand picks up further. I don't see that as a major impediment to growth in the space, but it does create challenges, certainly, to the extent that the major energy companies were, and the resources capital resources that they have at their disposal would have been, or was anticipated to be, a tremendous source of investment in the space. Those resources have been reduced, and there's just no way around that. Third-party resources and financing from banks, private equity funds, and others also become more constrained in an environment like this, obviously. There's a lot of financial uncertainty, a lot of economic uncertainty, and whether that leads to asset devaluation and what that does to financing. We've seen some disruption in that as well. So there are challenges for the biogas space, for renewables in general, in terms of access to capital created by the economic impact of COVID. And you have additional issues that are related to demand. Fuel demand, obviously, has been severely disrupted in many markets. In North America, for example, transit operations were practically shuttered in some places as a result of the pandemic. Transit customers have been huge buyers of renewable natural gas for natural gas bus fleets. And when they aren't driving, they're not consuming biogas, it's impossible to get your product out to a customer. So demand disruption, and it is a disruption. I don't see it as a destruction. I mean, we already see bus fleets are getting back out in many markets and running more regular schedules, but the impact of the pandemic, and we'll see, this thing, we're still sort of in early stages, at least in some parts of the world, of seeing how this is going to play out. But certainly, I think that there are issues for biogas producers that sell into the vehicle fuel market, in particular in terms of demand, and what this could do to demand in the near term, and how they get their product to market, and how reliable that market is, particularly in a place where a market like California or Oregon, which are low carbon fuel standard markets, and those low carbon fuel standard credit and programs are so important to the biogas producer, and any really significant reduction in demand in those markets, which were already basically at capacity, is going to create an issue for producers that were relying on those credits for their revenue streams. And just 1 second here, I sort of lost my place. The additional issues that we see, impacts that we've had on projects that we've been working on or that our customers are working on. Execution, construction, if you've got the money. So we talked through, difficulties in financing, uncertainties around demand, and then there's just project execution issues. I mean, we've had projects that we've been working on where we've had shutdowns because of concerns about people on site that are ill and may have been exposed to the illness, multi-week shutdowns at sites, sometimes local orders shutting down construction at sites, slowdown in permitting, and supply chain disruptions. I mean, the biogas industry is a global one, and products are manufactured all over the world that go into biogas plants here in North America, and they come from all over the world, components and compressors. And when you have shutdowns in one part of the world or issues with transport or transport rates going up because global shipping is down, all of these things can have a significant impact on timing and costs of project execution. Most of those, I think developers are managing to sort through, but without a doubt, it creates challenges for project execution. And looking forward, we have to think about what is the impact on the end use markets. So the most important market here in North America for and by that I mean the prices. Obviously, we talked about demand in the low carbon fuel standard market, but the most important market for North American biogas producers has been and continues to be the vehicle fuel market. And what kind of impact does the drop in oil prices have there? Well, there's a couple things. To the extent that you have less money or project execution issues and less product being generated and sold, then you're going to have fewer D3 RINs potentially being generated under the renewable fuel standard. Fewer D3 RINs should lead to higher prices relative to the RVO. You'd have less supply to meet the demand that is contained within the RVO, and that could be bullish for prices. And to a certain extent, maybe that is reflected in the D3 RIN price having gone to having risen over the last 6 months to $1.50 around where $1.60 where it is today. Drop in oil prices also leads to a higher cellulosic waiver credit price, and the cellulosic waiver credit price can drive value in that D3 RIN category. If people think that the D3 RIN generation will be short the RVO, then they can cover their obligation by buying the cellulosic waiver credits. So that can create a proxy value that can drive value for the D3 RIN up towards that cellulosic waiver credit price plus the D5 RIN value. And I think we should see a significant increase in that cellulosic waiver credit price for 2021 based on where oil prices have been and gas prices have been this year. So maybe that's bullish for the producers that are accessing the renewable fuel standard market generating D3 RINs. That could be a positive impact of this crisis on the value they're able to generate from their gas, because it could support that D3 RIN price. Lower supply, I don't, biogas, to the extent that biogas is obviously generating a substantial volume of LCFS credits under California and Oregon's programs, I don't really think that the demand disruption or the potential for smaller volumes of biogas accessing those markets, given the size in that market, I don't really see that having an impact on pricing in the LCFS market. And pricing in the LCFS market remains really, really strong in any event, at or close to the ceiling. So can't go much higher when it's at the ceiling. But if you can still access those markets reliably, I think they'll continue to be good value in the LCFS market. So those are some of the key aspects, the key impacts that I foresee and have seen in the work that we're doing of the oil collapse on the biogas market. I think looking forward, obviously, there's, depending on where you live and how the pandemic is progressing in your area. I mean, I know here in Los Angeles, where I live, it's kind of worse than it's ever been right now, and we're actually sort of in retreat from our economic opening, shutting things down again, trying to get a handle on it. So it's very hard to predict, obviously, given where we are, how this will continue to impact demand, for example, in California, which is such a crucial market for biogas vehicle fuels. But the one thing that I think we can all be certain of is that it is there is some end at some point, to the impact of this. And, you know, so far, I would say the industry, from my perspective, has really weathered the storm pretty well. Most of our projects that we're working on, or that others have in our customer base are working on, have continued to progress successfully with some disruptions and delays. The market, the pricing and value in the vehicle fuel market is still excellent. If you look at the D3 RIN value, the LCFS value for biogas products that are sold in the vehicle fuel market, and we still see tremendous growth and interest in the voluntary markets or utility markets and buying biogas on long-term and fixed price basis for non-vehicle fuel markets. And that's something that is relatively recent. I mean, there's always been some level of demand in that space. I don't think that the oil price or pandemic-related crash in prices necessarily is driving that demand. That is really being driven more by the decarbonization goals of the gas utilities. They're looking for a way to cut their own carbon footprint and to use the infrastructure they have while providing cleaner products and lower carbon products to their customers. So we are seeing a lot of growth and interest. It's still mostly exploratory, I would say, interest and demand, but that's that's a space where, if things do become challenging in the vehicle fuel market, where biogas producers can potentially find profitable long-term financeable offtakes in increasing volume in the coming years, and a place to really, if the uncertainty of the current economic situation and the pandemic is an issue for fundraising or execution, some of the risk that project developers have right now, or their investors, can be mitigated through seeking out those growing voluntary long-term fixed price markets. And so I do think and do see, I think people are more risk averse. People are more conscientious about the risks, given everything that's happened in the last few months and the volatility in commodity prices generally. And so I do see more producers looking to those voluntary fixed price markets, trying to structure long-term deals to take some of the risk out of the revenue side of their equation and not just focus entirely on the vehicle fuel market. And I think that's that's always been a really strong positive for biogas generally, is that it's such a flexible fuel product, such a flexible energy product, that it can be used for power generation, heat, and as well as for vehicle fuel. So with that, I've been talking for a while, and I would love to answer any questions and have a dialogue about anything that any of the attendees would like to discuss.
Wonderful. Thank you very, very much for that, Harrison. It was indeed very insightful, and I would say your approach is very pragmatic, still very optimistic and realistic as well, which is great and tells a lot about this market as well. So as we're starting the Q&A, I would like to know your thoughts about the long-term potential for renewable natural gas. I know we spoke a lot about, or you mentioned a lot of different factors about biogas. What do you think about the long-term market for renewable natural gas?
I like to think that it's going to be strong. I mean, there's there is a lot of pushback in the environmental community. And there's been pushback in the environmental community on biogas and RNG for a long time. And as the agenda in the environmental community has been driven or focused really on electrification of everything, which is kind of the mantra you see at most of the environmental organizations these days, they really have got biogas in their crosshairs and are really attacking its environmental credentials, I guess. I think it's really unfortunate that that's happening. Obviously, but I don't really think that it's necessarily means that there isn't a bright future for biogas as an alternative and low carbon energy resource. And the reason is, I mean, the thing that I feel like is often overlooked, I guess, in the environmental community is when they focus on RNG. And there's a big report came out yesterday. I think it was Earth Justice and Sierra Club that really focused on building decarbonization, suggesting that biogas had no role to play in building decarbonization, that all buildings should just be 100% electric. And I mean, I do think there's a legitimate, obviously, and a debate to be had about what is the best and highest use of biogas. Where are you going to get the most environmental bang for your buck? Unfortunately, in the process of trying to stimulate that debate, I feel like biogas gets demonized a little bit, and it's suggested that it's just greenwashing of fossil natural gas, which is really not the case. And I think most people that really spend the time to get to know the people in the industry and see the projects that people are building and visit farms and visit landfills and visit anaerobic digestion facilities where they're taking MSW and producing gas can appreciate that there's a lot of really good work being done. That the thing is that biogas from the decomposition of organic waste, it's unavoidable, right? I mean, we're going to have organic waste produced in our society and in our civilizations. That is an unavoidable reality. And how we manage those wastes, to me, biogas is a big part of the biogas story, is that it's a waste management solution. It's really about turning waste product to valuable energy product. And it's a waste conversion story as much as it is an energy story. And I feel like that gets lost a lot in the discussion. But it's because it is unavoidable and because we will continue to produce the waste, biogas is still going to be here. And I mean, venting it and flaring it makes no sense. So as long as we're looking for productive uses for biogas, which I think will be forever, I think that it will continue to have a nice role to play in a total energy mix. I mean, there's no silver bullet for the decarbonization of our energy matrix. I mean, we have huge challenges to meet not just current, but growing energy demand. I mean, the welfare of any society can almost be measured directly by the available energy product they have. I mean, energy drives everything from healthcare to food production to, I mean, that is a indisputable fact. So energy poverty, obviously, not having access to energy is not having access to healthcare, not having access to food, not having access to any of the basics for human life. So, we need to continue to produce energy in increasingly large quantities, which means we need every solution on the table, every one of them. Yes, let's electrify things wherever we can, wherever it makes sense, wherever it's cost effective, and we can do that and run things on solar and wind and geothermal and energy efficiency. And I mean, those are incredibly important and maybe the biggest pieces of the puzzle, and certainly huge areas of focus, but that doesn't mean that there isn't a really significant role for biogas to play, especially in those areas where electrification currently is challenged, like high heat application industrial products or heavy duty transit, rail, for example, or marine. Biogas can play a nice role there where electrification is still really challenged given just the physics of it. And it won't be forever, but I mean, we have all this biogas available to us, and capturing and using it is so important. And I think you see that in the carbon scores that biogas from dairies and hog waste farms generate under the California GREET model, these negative carbon footprints. And no one's going to convince me it's not a good thing to go throw a cover on a digester, capture the gas, and displace diesel with it. I mean, that is a good thing. That is something we need more of. And there's a lot of opportunity to continue to do that. And so I think the long-term prospects continue to be bright.
Very, very good insight once again. And I think you made a very valid point initially when you mentioned that, and there is a big push towards 100% electrification and in general eliminate internal combustion. So with that in mind, do you think that there are any sort of major policy priorities or initiatives that can actually help to accelerate the development of renewable natural gas and biogas utilization?
Yeah, without a doubt. I mean, one thing that I'm keeping my eye on is the infrastructure bill that's working its way through the federal infrastructure bill that's working its way through the House and Senate right now. I think it's called Moving Forward. There has been there is a provision in there, as I understand it. And I probably should, maybe somebody on the call knows, has a more recent update on that than I do. But at least my understanding as of the last time I checked was that it included a provision that would provide an ITC parity or treatment for RNG or high BTU biogas projects that biogas electricity projects have traditionally been able to avail themselves of. So, and that's something that's been a policy priority for the biogas industry for practically a decade now. And if that could happen, that would create a tremendous, I think, amount of additional investment in the biogas space, because it would really provide some innovative ways to reduce CapEx on the front end on some of these high BTU gas projects through utilization of the ITC. So the investment tax credit, if that happens, that would be great, and it would be a nice driver for investment in the space. The renewable fuel standard is hugely important right now to the, I think if you looked at the biogas industry in North America and you broke out how, where's all the revenue coming from, the renewable fuel standard is certainly the largest piece of the puzzle. So existing investments, the financial condition of existing developers and investors in the space, a lot of people have a lot of exposure to that program, and need it to continue in some format for a number of years to come. And of course, we have a federal election, a presidential election coming up in November, and the impact that could have on the RFS, which is at a crucial juncture in terms of the reset, thinking about what the RFS looks like for the next decade, there's a lot that has to be done at the EPA, and it's going to make a big difference, I think, one way or the other, who's in charge at the EPA. Obviously, the last 4 years, there's been a lot of volatility in the RIN market and a lot of whipsawing in terms of the EPA's administration of the program, sort of, catering to the interests of the refining industry and trying not to get too far across purposes with the corn industry and corn lobby. So it's a hot button political issue. It splits parties, as it always has. But seeing how that ultimately gets resolved in the next, up through the election and after, I don't really see any significant change happening through the election, but once the election's passed and we have a new administration, how that unfolds could be really interesting. And I've heard talk about a federal LCFS and what that means and what that would look like and how that impacts the RFS is another really interesting potential policy area. But all of this really it drives at the importance of maintaining a strong and vibrant vehicle fuel market for biogas. I mean, that's where most of the growth has been driven off of in the last 7-8 years in the biogas space. The first biogas vehicle fuel that we sold generated RINs and LCFS credits was 2013, and I think we did like 20 million ethanol gallons that year, and this year we'll be on pace to be over 500 million ethanol gallons. So we've had tremendous growth in the vehicle fuel market for biogas, and that's driven a lot of successful investments and improved the financial health of companies in this space and given them more resources to deploy new projects. And maintaining that and some stability in that market is a crucial policy goal as well. And I think these voluntary markets I spoke of earlier, the utilities want to be big players in the space, but it requires often legislation or cooperation of the Utilities Commission and that governs them to get these voluntary programs in place where they can actually go into the market and buy the product at a premium. So those kinds of programs that support gas utilities' efforts to decarbonize, I think are useful drivers for long-term demand as well.
That's, yeah, I think that's a very, very, very good response, and it actually responds to a lot of the questions that are coming through from our audience as well. Um, so yeah, it's great to hear your views on that. I know we covered a little bit on, the different areas of investment, and especially in this current climate, where there's, quite a bit of disruption. Um, but in terms of, what major kind of energy companies are looking for when it comes to renewable natural gas market investment or involvement, could you tell us a little bit more about that sort of criteria?
Yeah, that's a really interesting and good question. I mean, so I was president of a biogas company that was a subsidiary of Clean Energy, Clean Energy Renewable Fuels, that was bought by a major energy company, BP, which is how I ended up at BP. And we had built 3 biogas plants that we were running, and we had the ability. We built a joint venture with a counterparty that gave us operational capabilities to execute on these projects and build them. And we had a long-term supply and participation in the RIN and LCFS markets. So those were sort of the key drivers. All of that, of course, we got lucky too, and that in 2016, 2017, we had really high RIN prices and good LCFS prices. So we were, our financial performance was really strong at that time, and it was a good opportunity to sell, a good opportunity for BP to buy. And they had a platform, and they were able to fold our business into it and continue to grow it. And so I think a couple of observations that I would make based on that experience. One is that the major energy companies, they don't really, at least BP, and I think this is true for virtually all of them, it's really hard for them to scale down their projects to the size that most biogas projects are. They look at the biogas projects that we were doing, and ones that we thought of as large projects, are just really very small for these companies that are, used to investing billions of dollars in capex and are looking at, small projects that produce 1,000 or 2,000 M's a day of product. They're very small. So they have these, at BP, we have this massive commitment to health and safety and environmental compliance, and the processes and procedures that we have in place that are meant to govern and keep safe operations on multi-billion-dollar deep water drilling platforms don't really scale down to a $15 million biogas plant on a landfill, right? It's so there's some challenges there, and what that means, I think, for us, and I think for a lot of the other major energy companies, I wouldn't be surprised to see this pattern be repeated, is that you need an operational partner. You need somebody who has already built the operational and engineering and construction platform to execute on deals safely and competently in this space at the size and scale that the deals are. So good operational partners, I think, is key. And then a platform that can be scaled up, so that over time it can grow into something that is more, relevant within the structure of a huge company with 70,000 employees and billions of dollars of business. That the business can be scaled up, that over time it can achieve economies of scale. Obviously, the more predictable you can make your financial performance, the better, as in any business. So I think those are all key components. The lower carbon, the better. I know for us at BP, the lower carbon, the more that I feel like we're advancing the agenda of decarbonization. The carbon reductions achieved through investment in or development of a project are also really important drivers and things that are increasingly highly valued internally when we're looking at investments or execution in the space.
That's great. That was actually one question that you just covered again, that I was going to ask, and you you responded to it very impressively as usual. So yeah, somebody on the platform was just asking literally that, how do you basically deal with the fact that the scale of projects is so much smaller in these markets? So uh, basically, even if you have unlimited capital available, the development or deployment of biogas projects is almost exclusively accomplished through, a series of smaller projects. So it's not like,
Hmm.
base load power plants and offshore wind, offshore oil and gas drilling assets. So, um, you know, the fact that BP and probably other global oil and gas producers effectively execute projects at such small scale is indeed impressive. And you've just kind of explained the key factors of why that happens and how that happens. So that's great. I think I'm just trying to look through the myriad questions that we're getting through. Um, but here is a different one that I think is interesting. So um, somebody's asking for your opinion on the outlook for low carbon intensity dairy RNG in California, and if the supply can grow rapidly over the next few years. Is there basically enough demand, in your opinion?
Yeah, so it's something we certainly try and keep a close eye on. Um, I do think in the near term, I don't really see an issue simply because I think while already over 90% of the natural gas vehicle fuel demand in California is being met with biogas, um, uh, it's mostly landfill gas, which of course has a much higher carbon intensity than the dairy biogas. So I think what I envision happening is that you'll see, displacement where these lower CI fuels will come in and they'll be provided in the California markets, and the higher carbon intensity fuels like landfill gas will be sold in the natural gas fuel markets outside of California or Oregon. We may also see expansion of LCFS markets. I think that there's been a lot of work done and a not insignificant chance that we'll see expansion of LCFS into New York or even beyond in the Northeast and the RGGI states, or Washington State. Be some areas where that could expand, or maybe even Canada, although they've pushed their program back, I think, a year because of the pandemic. But in the near term, I see there being sufficient, demand to take most of the biogas that I see coming off the dairies into the LCFS markets and displacing landfill gas. And I'm optimistic that there's going to be continued growth in the vehicle fuel market in the LCFS jurisdictions, that this ultra low NOx platform natural gas engine will continue to get deployed. There was a good announcement last week about some work that Clean Energy and Chevron are doing down in the ports of Long Beach and Los Angeles to get more trucks on the roads down there in their Clean Ports program. And I'm optimistic that that momentum will continue to build, and that we'll see more and more deployment of clean trucks, these ultra low NOx trucks running on RNG, which will pull in more, create more demand for the product. So, it's also a question as to how quickly and how much of that dairy biogas comes online. I hope a lot, and I hope fast. But I do think that in the near term, we'll be able to take it all into these LCFS markets. At some point, you could end up where if you don't have expansion of LCFS markets, yeah, you could end up in a situation where, it gets tighter and tighter to access the LCFS markets with that product, and that's not unimaginable. But I don't see it happening in the near term. I could see it happen in the medium term, depending on how demand grows in the vehicle fuel market, and depending on how quickly these dairy biogas projects get built, and how well they're executed on.
Yes, and that's hopefully very soon.
Right.
We will see, some uptake on that. And there are a few questions. This is a recurrent theme, as I can see. There is a recent kind of movement or wider interest towards hydrogen how do you see this affecting the biogas and RNG markets? It could be, negatively or positively. So yeah, I
Yeah,
will let you comment on that.
yeah. Another great question, and something that I should have mentioned earlier in talking about the long-term prospects for biogas. I think if hydrogen becomes a key fuel for decarbonization in the energy space, whether it's in transit or storage or wherever it, or as a feedstock for, refined products, I think biogas has a great role to play because you can produce obviously hydrogen from reformation of methane. So providing green hydrogen is already a mandate in California for hydrogen fueling, and so it's a new market and a market that I think biogas is very well positioned to serve because it can provide feedstock to produce a low carbon or carbon negative hydrogen product. So I think that that's positive, right? I guess the flip side of that would be, well, if hydrogen trucks become the principal platform for decarbonization of heavy duty trucks or transit goods movement, does that reduce, because the hydrogen trucks, they're really electric trucks that have hydrogen essentially batteries or hydrogen fueled storage, but they're electric trucks that have a hydrogen battery essentially, and so does it end up meaning there's much demand on a MMBTU basis? Would there be as much demand as there would be if those trucks were running on directly on biogas? And I'm not sure. It could create less demand ultimately, but that's all relative to how many trucks get deployed and how quickly and that sort of thing. So there's the possibility that the perception that hydrogen trucking would be the future might slow down adoption of these ultra low NOx natural gas engines, but I really hope that's not the case, because I think that would be the wrong thing to do from a policy perspective. I mean, we've got a great tool to dramatically cut carbon emissions and tailpipe emissions that's available right now, that works, that is at a price that's affordable, and can be deployed in scale and fueled in scale today. So, I mean, I really hope that given the time sensitive nature of the challenges we face, that we don't wait for what we think might be a better solution that's coming 5-10 years down the road, and avoid investing in the incredibly necessary emission reduction and air quality improvements we need today. I hope that that's ultimately that it doesn't have a negative impact on biogas adoption and use, and in the long run it just creates a new market that biogas can serve, if it is proven to be a superior platform and it comes to market in a cost-effective product.
Yeah, and I agree with you entirely. I think there are, a lot of positive effects that could come out of this kind of, new interest. I mean, it's not so new anymore, but it's, I think, kind of coming to fruition, and
Okay.
lately. So that's great. And I think, touching on a similar point, do you know if, there are other markets, or what kind of markets does BP, for example, expect to make carbon neutral in the next sort of, say 5 years?
Well, I mean, in the next 5 years, what markets do we expect to make carbon neutral?
Yeah, basically that's it. It's a question that came through the platform, and I think, yeah, that is the question. It sounds like that.
Yeah. Well, I mean, I think the areas where we're certainly making big investments and have a lot of focus right now, power generation. I think the opportunities to decarbonize power generation at scale and cost effectively are just huge. And I think, we have a big solar joint venture, Lightsource BP, that is making big investments in that space. We see a lot of exciting things happening in wind, and I think continued large-scale investment in decarbonization of power is I mean, it's already happening, right? And I think we'll continue to invest in and and play a role in that. Vehicle fuel is a lot harder to do, but we're certainly really focused on trying to make investments in lower carbon fuel products like biogas or renewable diesel or others that can continue to drive the carbon footprint down on transport fuel. And I think that would be true for industrial heat and high heat applications as well. That you're going to be looking at. We're still going to be relying on combustion, I think, for some time to come, and a lot of our core energy needs, like industrial, heavy-duty goods movement, heavy-duty trucks and transit, marine, rail, air. There's going to need to be continued combustion. For some time to come in those sectors, given the physical realities that we're dealing with. I don't know that that's forever, but certainly in the near future. And I think decarbonizing the liquid fuels there is a focus. I don't think we get there in 5 years to zero carbon in those combustion fuel products, but I do think that the energy companies are going to do everything they can. And there's a lot of things that can be done, quite honestly, that I think a lot of the energy companies have been focused on just to reduce the carbon footprint of the hydrocarbons we already produce and use. In terms of capturing fugitive methane and eliminating methane leaks and transporting goods more efficiently, and getting goods to market more efficiently, having more efficient engines. There's a lot that can be done just to reduce the carbon footprint of the hydrocarbons that we're going to have to continue to use for some period of time as we focus on decarbonization.
Oh, sorry, I was on mute. Understood. Thank you so much, Harrison. Okay, there was another question that I highlighted here. Oh yes, do you think that the restriction on small refinery exemptions can drive up RIN prices?
Yeah, I think the fewer small refinery exemptions to get issued, the higher RIN prices are going to be. I don't really feel like I have a tremendous amount of clarity on exactly how that's going to unfold. The court case and the EPA's handling of current applications, and what happens between now and the election. But I guess I don't know that I see a significant. I kind of feel like my gut just sort of says, well, that there's unlikely to be anything done on the SREs. It's dramatic in between now and the election. To me, that would seem unlikely. I just feel like this is probably an area that the administration doesn't want to muck around in too much, given everything else that's going on. So we'll see. But
Yeah,
I think
guess
how the SREs continue to get processed and handled, I guess sort of feel like it won't really get punted to the next administration, maybe. That's speculation, but
sure. I guess the future will tell. And in terms of the scale of biogas production that can be reached by 2030, what are your thoughts on that? What kind of scale are we looking at, in your opinion?
Yeah, 10 years, I would hope at a minimum, that we keep growing kind of at the rates that we have, which would mean billions of gallons of biogas that's just in the vehicle fuel market. I think a very significant percentage will be by 2030. I think a very large volume of the biogas that's being put into the pipe will be used in non-vehicle fuel applications as well. I do see that as a reality, is that you'll see utilities and industrial buyers and other high consumers of natural gas that are opting for biogas to cut their carbon footprint and meet their sustainability goals. So yeah, I think we could see the industry grow another tenfold by 2030. I certainly hope so. There's more than enough opportunities to develop projects to get to that kind of a growth number.
Yeah, that would be great. I certainly hope so too, and I think a lot of the different players in the industry have the same kind of expectation or fighting for the same thing. So there is another question here. Basically, the largest oil companies still have different long-term price forecasts when it comes to asset impairment purposes. So what are then the main ways that BP is kind of using to distinguish itself from peers in outlook assumptions?
You know, I gotta be careful of that one. That's not really not really in my wheelhouse, and I also don't want to, you know, wander into an area where I'm really not authorized to speak to BP's views. You know, it's a huge company, obviously. I do know that in a number of things that are quite, you know, widely publicized by BP in our view of the long-term oil price is that, you know, I think we have been well before the pandemic and the collapse in the oil price. BP was very public about its belief that peak oil no longer meant peak oil supply, it meant peak oil demand, and that we foresaw a future, and I guess depending on, you know, which lens you're looking through, how far out, you know, you could debate, but that at some point, you know, 10, 15, 20, some point in the future, that we were going to hit a point where oil demand would peak and be dropping globally, and dropping potentially quickly enough that and soon enough that a lot of hydrocarbons that are currently out there don't get produced, and you can't produce oil. You know, the prices would drop commensurate with the drop in demand, and that you would see only the lowest cost producers still producing oil, and the lowest cost producers being, you know, the ones that are producing the, you know, really in the Mid East, I think, by and large. So I think that's sort of the big picture, is that, you know, the oil price will ultimately be declining at some point in the not too distant future, based on decline in demand. And I think BP's been pretty upfront about that and about that being a big driver for the transformation of the company's business. And to be quite honest, I think anyone who looks at the numbers realizes we can't afford to produce and combust all the hydrocarbons that are out there. I mean, it would be an environmental catastrophe if we did that. So, you know, I think I think anybody who's looking at this honestly is going to recognize there's going to be a lot of oil that's going to need to stay in the ground.
Mm-hmm, mm-hmm. Yeah, that's a very valid point. I think we have time for a very quick last question, and then we will have to wrap up. I thought this one is pretty interesting. How does the revenue for renewable natural gas sale to utilities stack up against, for example, the California transportation fuel on a relative value basis?
Yeah. Well, so it's a good question. I think it depends on your carbon intensity, of course. I mean, if you're a low carbon, one of these sort of negative carbon dairy or hog waste projects, there's no comparison. I mean, if you're a minus 250 CI and you're selling into the California LCFS at a $200 LCFS credit, the utilities or the voluntary buyers aren't going to pay you anywhere close to what you would get in those markets. It's not even close. It's a fraction of the price. You know, but there you're looking at, you know, on an MMBTU basis, you're looking at gas that could be worth, you know, $75 an MMBTU, and no utilities paying that for gas. I can't afford to. But if you're a landfill gas producer, a wastewater treatment plant, or somebody that's at a 30 or a 40 CI, or maybe doesn't even have the ability to get into the California market anymore, well, there I think you're really just looking at what's the price of the D3 RIN. And so if the D3 RIN at $1.50 is $18 or $17.50 or something in MMBTU, I don't know that there's utilities, many, and there may be some, there are some, but there's a whole lot that are out, our voluntary buyers are out there paying quite that level on a long-term fixed price, but they shouldn't have to either, because if they're offering a 5 to 10 year fixed price, it's obviously going to be at a discount to what the current spot market value would be. So, you know, I think you see prices anywhere in that voluntary market, you know, from $9 to $15, $16, $17, depending on the market. I mean, there's some that are paying north of 20, especially north of the border. Yeah, I think that and a huge component of that is what is the term on the deal? You know, short-term deal, higher price, obviously. Long-term deal, lower price.
Great. That's again a very pragmatic response. So thank you very much for that, and for everything else. I think it was a great discussion. I really really enjoyed it. I hope everybody else did. So yeah, thank you everyone who got involved. And especially Harrison Clay from BP for making this a huge, huge success. We've actually had more than 1,000 of you people signing up for this webinar. So yeah, definitely hope you found it valuable. And I know I've said this before, but for those joining in later, the recordings will be sent to all of you via email. So what we know from this webinar is that there is a lot that we can be looking forward to, although there are quite a few challenges at the moment, and there have always kind of been. There are different questions that are being raised around demand and the potential for the biogas and renewable natural gas markets. But there is definitely a lot to be done in relation to webinars and white papers and reports and stuff like that, like this experience. We are always open for collaboration, so just reach out to me directly if that's something that you're interested in. But until then, I'd like to thank everyone once again for tuning in, and wish you all a wonderful day. Thank you, Harrison, and everybody else on the line. Have a good day.